No! No!
Hey guys, welcome back to the second video of the channel since we changed it up a bit with the rebranding and such. That animation right there was by DustinO'Daffer. All the credit goes to him. I've seen it before. It's hilarious and it honestly looks like today and yesterday and that animation. So yeah, you guys are probably wondering what do you mean by the market's crashing, or why is it crashing, because you don't have the information yet. I made this small short video to hopefully give you a brief understanding of what's going on. So right now for the week, as we can see, a bunch of sectors are in the red, such as Google, Microsoft, Apple. Tesla's up 18%, but if we look at the daily, you can see it down 2.5%. So a lot of things have happened, and a long story short, my bad, pretty much the Federal Reserve is tightening monetary policy, my bad. So pretty much they're increasing interest rates. They're saying there's not gonna be any more bailouts, and they're just gonna keep with the plan and slowly increase interest rates. What this means is that businesses can't have higher interest rates to borrow money, which decreases production, decreases advances, new projects and such, because of lack of money. And that's why pretty much the S&P's down $6.86 today in a week, my bad. ARK is down almost $10, which is 10% in a week, which is kind of dramatic. But the reason why is because all these companies that are their own, like such as Tesla, Roku, Teladoc, Zoom, Coinbase, Unity, and so on, Spotify, you know the drill. Pretty much those companies can't borrow money because of the interest rates, so investors are not interested in those companies because they know, hey, they're gonna take a while to bring a new product or whatever. So far, yeah, it's kind of drastic, the whole situation that's going on. But honestly, the only recommendation I can give, I'm not a financial advisor by any chance or means. I'm not trying to be, just entertainment purposes, just to express myself as an outlet. It's just to hold on, and when you see red, you keep buying the dip and hopefully just compound your investments. So you keep buying more, because honestly this is a great opportunity to buy. I know a lot of stocks have been in all-time highs and such. Like you can see ARK Innovation at the start of 2022, it just increased rapidly, almost 665% return, which is insane in the span of a year almost. But yeah, a lot of stocks have hit all-time highs and they're just correcting themselves. It was just a matter of time. But by any means, don't feel frightened. It's not gonna be like the start of the whole drill, such as SPY, as you can see in a year. It's not gonna be as drastic as this. In the start of 22, look at this dip. We just ripped through it, guys. Like, it's insane. We went from 228 in the span of what, 2 years, or pretty much 1 year, because we started in a year, to 470, almost doubling our all-time low, which is kind of insane. We did receive a lot of help because of the stimulus packages and the Federal Reserve bailouts and whatnot. But yeah, that's pretty much what's happening. They're just tightening monetary policy, increasing interest rates rapidly. Well, not rapidly, but going back to normal. But you're gonna see a lot of things such as inflation, and the prices of gas, energy, and so on. And yeah, the lending of money. So that's gonna start some problems. And also the fact that Omicron virus is spreading rapidly. It's not as hurtful or impactful in terms of life or death severity, but there's been a lot of cases lately because of the holidays and New Year's and such. So there's a lot of things happening. The fact that they decreased the amount of days to come back to work is no longer 10 days, it's 5 now, because they're scared of people taking too much time off. And in some places they even closed down whole stores, such as Walmart, nearby Walmart, which closed down because they had too many of their employees get COVID or the new variant, and then they're no longer in work and they have no employees. The business can't run. So it's a bunch of domino effect in terms of things. But that's pretty much what happened. That's the reason why the stock market is down. It's just the Federal Reserve announced that they're gonna be tightening their monetary policy, and interest rates are going to continue to go up, and there's no more pauses, no more breaks. And yeah, hopefully this video was somewhat useful to you guys. And yeah, if you enjoy the content, please make sure to subscribe, leave a like, and comment if you want any other future videos. But yeah, I hope you guys have a fantastic day, and just remember, just keep buying the dip. You know, try and keep your emotions out of it, because as people, you know, got fearful when SPY took a tumble, you can see what happened in the long run, in the big picture of things. You know, people probably sold halfway in the bottom because they're scared, oh, that's the end of the world or whatever. But you know, as humanity has done in the past, they keep breaking, finding new cures, and so on. So from a low there can be a high, and from a high there can be a low. That's what I gotta say. But yeah, hope you guys enjoy the content, and yeah, peace.